We detected an unusual trade worth $52.8 million on Taiwan Semiconductor stock, ticker symbol TSM. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying Taiwan Semiconductor stock or bearish and selling Taiwan Semiconductor stock. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into the data to find out what this wealthy investor is doing. And then we will show you our option strategy to reduce risk while increasing our chance of profit. Now, as we can see here on the options time and sales tape, there were 20,000 contracts being traded today at 11:08 for the February 21st options at the 180 strike calls and the May 16th options at the 200 strike calls. And so when we take a deeper look at the option chain for these trades that expire February 21st, we can see here that this trade at the 180 strike calls was actually a closing trade based on our analysis. We can see here the open interest, 53,000. That is greater than the 20,000 contracts that were being traded. They were closing out of these trades to take profits and rolling to a higher strike price and a further date out to the May 16th options. We can see here at the 200 strike calls that the 20,000 contracts being traded are clearly opening trades today because the open interest is much less at 553. And so now that we know which trade was the closing trade and which one is the opening trade, we can now calculate the total trade costs because this was the closing trade and this was the opening trade, the May 16th options. And so we have 2641 for each of these call options. We need to multiply by 100 since each option represents 100 shares of stock. And so each call option costs $2,641. And since there was 20,000 contracts being traded, we multiply that out and we get a total of $52.8 million. But keep in mind, based on our analysis of other data, this is still a higher risk trade in comparison to the trades that we share on our website. And so if you want access to lower risk, higher probability of profit trades, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas than this one here. Now, if we analyze this trade that this wealthy investor is now in for these May 16 options, you can see we are also in this same position. POS stands for position. Green means buy, but we use position sizing to manage our risk, where we also bought these call options to open. And so when we analyze this trade, you can see here that as the share price goes up, which is represented on the x-axis here, and the profit loss on the y-axis, note the zero break-even line here. And so when the purple and blue lines are below it, it is a negative loss. If the share price goes up, it becomes more positive gain because this is a long bullish trade. And we can confirm it on the Greeks here. We have a positive delta trade. If it was a bearish short trade, it would be a negative delta. But keep in mind, there is a risk on this trade of a -8 theta. So time will decay the value of these trades. Every day that goes by, these call options will lose value. And that is why the break-even point on this trade shifts upwards to a higher share price from the purple line, which represents the current date, to the blue line, which is the expiration date of those options. And so the stock has to trade much higher by expiration at $225 a share for these call options to be profitable, even though they are the 200 strike calls. So be aware of that risk with trading these single call options. Now, to mitigate this risk, one of the strategies that we use, we can show over here, is this is for the March 21st options, where we bought the 230 strike calls, and we also sold the February 21st options at the same strike price. You can see our position here, but this time the red means sell. And so we sold these options to create a spread, which is known as a calendar strategy. And this only costs $313 of debit each, much less than the unusual options at $2,600. And you can see that this strategy is also a bullish trade, because you can see here on the Greeks, we also have a positive delta trade. But notice the advantage of this trade. We have a positive theta. And so time is not much of a risk on our trade. It does not decay our trade. We do not lose value on our options, primarily because we sold call options to offset the other call option that we bought. And so that is how we reduce our risk as far as time decay goes, because there are other ways to reduce even more risk. If you want to learn more about how we trade and gain access to the stocks that wealthy investors are trading with a higher probability of profit, go to our website. We'll put a link at the top here. Let us know in the comments below. What do you think will happen to Taiwan Semiconductor stock? Will it go up? Specifically, will it break the $225 share price, that break-even point? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.